Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, how did oil prices earlier in the week end up lower than the lowest oil well or deepest oil well?
I don't know. I never imagined negative oil prices. Didn't even know such thing was possible. But I did, I've said for, several years, because of the higher degree structure, that oil was going lower. And, throughout even the advance, I think it was, back in the summer, I maintained that it was a counter-trend bounce and that oil and commodity prices were ultimately going lower. And, all that's obviously panned out exactly like anticipated. And it was based on, like I said, the higher degree structure of the cycles and the statistics surrounding those cycles, told us what we should expect. And, while it hung in there and, teased everybody, and I just pulled up a chart as we were talking, we started to get the break in late 18, and then in 19 we had, a couple of rallies, but it didn't change the structure, and it just kind of levitated and kept everybody hopeful, and then it cracked, exactly like the statistics suggest. And so, I guess the moral of the story is that sometimes it can take longer than you think, but as long as the structure and the statistics are valid, then odds are, if you've seen something, a certain number of times, you have some pretty solid statistics, once you see this, then this is the outcome, then odds are you can expect the same sort of outcome once you see that kind of setup again. And that's exactly what happened.
Mm-hmm. Now, Tim, you've talked about low oil prices on the way for quite some time, but how can you anticipate something that has never, ever happened again, and likely will never happen again either?
Well, I didn't anticipate that they would go negative. I'm not saying that at all. I never anticipated them to go negative. I did anticipate them to go lower, and I anticipated them to go below the 2000. I'm looking at oil. When did it bottom, in 18 or 19? Yes, it was in 2000, and it was December of 18. The CRB and some of the other commodity-related indexes bottomed in January of 19, and so I wasn't sure which oil bottomed, if it was in January or December. But anyway, no, I was expecting it to go lower because of the structure of the cycle that bottomed there and of the previous cycle and the overall statistics surrounding that structure, if that makes sense. I know it doesn't make sense probably to people that aren't familiar with the work and reading the letter, but, cycles are nothing but a way to quantify trend. And so if you have a certain signature, if you will, or thumbprint or DNA of this, of a certain cyclical rhythm, and you know that, hey, if it behaves this way, then you can wrap statistics around it and say, well, when a cycle behaves this way, this is the outcome that you generally get. And that's what I'm trying to say, is that because of the setup that we had coming out of the last couple of 3-year cycle lows, and particularly the last one in 2018, early 19 on the commodity-related indexes, we knew that lower prices were expected and that we should go below those levels. I did not know we were going negative on oil. I figured it would go below. I think you and I talked about it, and I said that I thought that it was possible that we would go below the 2016 4-year cycle low or 3-year cycle low, and we did. But negative, no, I didn't dream that possible.
Now, as soon as I heard there were negative oil prices, I thought I should jump in my car and go to the service station and say, you owe me $80 for that fill up.
Yeah, have them pay you to fill up.
Yeah.
Yeah.
Obviously, that's not going to happen because there's the cost of refining. But still, could somebody have rented an oil tanker and taken a bunch of oil and have them fill up the oil tanker and then sell that oil later?
I guess the storage cost, the moral of that story was the storage cost outweighed the cost of holding it. I don't know.
Yeah, going forward then, what's going to happen with oil with this huge surplus slopping around the planet? And places like Alberta, oil at $5 or less a barrel. Apparently Nigeria and Venezuela are seeing the same kind of low prices. Eventually, we should see oil production slow down, but has it?
No, well, again, I have to rely on the cycle. And, how do I say this so it makes sense? I don't think, obviously as weak as oil prices are, they should be toward, some sort of a low. And actually we do have a short-term low in place. And like everything, nothing moves in a straight line. But overall, I think we're going to continue to see weak oil prices because we have not moved into the window for that next longer-term cycle low yet. And so, yeah, I think there'll be some bounces along the way. But I think overall we should see lower oil prices into probably late 21 to early 22 time frame. Well, lower overall commodity prices into that time frame, along with, I think, equities. The cycles line up to converge into that time frame.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's happening with gold right now?
Well, it's holding up. And let's talk about that for a minute. One by one, let's digress for a minute. Based on the statistics and the cycles, I think it was back in 2018, going into the early 2018, as I recall, one of the surprises I said for the year was going to be the bottom in the dollar. Maybe it was early 18, I think it was, when we talked about that. And I said the dollar had made a longer-term bottom. And again, that was based on cycles and the statistics surrounding those cycles. Well, the dollar hadn't exactly been on fire, but it's certainly moved up and held, true to those longer-term cycle lows. Looking at the statistics on commodities, I have said that we should, obviously move lower, looking at some of the, the raw materials data and those statistics, the Journal of Commerce data and those statistics, some of the other stuff, the BDI, the cyclical rhythms, and like I said, the statistics wrapped around those cycles, and that has all pointed toward lower commodity prices, as has this massive non-confirmation that we have with those commodity-related indexes and gold. Yes, just like I said that oil levitated last year a little bit, it didn't really go anywhere, but it just kind of was sideways if you look at a chart, and there was, two counter-trend rallies that gave hope, I guess, to the gold bugs, the oil bulls. But what we're seeing here is, I think there's a fear side of gold that people are, they know that there's obviously financial trouble, and I think that is maybe contributed to gold holding up as well as it has. But the reality is that you can't deny those statistics. You can't deny these cyclical, the cyclical setup that is in place with these other commodity markets and the relationships over, long periods of history. They are going to hold true, I think. I don't think this time is different. I mean, I think it would be foolish to think that this time is different with gold. Maybe it is, and maybe I'll be proven the fool on gold, but I said all that to say this. The very same statistics that have told me what was going to happen with bonds, with equities, commodity complex, tells me that the risk to gold is high, very, very high. And granted, while that risk is there, and while I see the issues with it pushing into this 9-year cycle top and it keeps hanging on, and in fact I had, an intermediate term buy signal on gold. It's hanging on by a thread, but I have the buy signal, but at the same time, I have all these statistics telling me this is a trap, don't trust it, and gold keeps pushing and pushing and pushing. So I say all that to say this. I think that we are, pushing into that 9-year cycle top. It keeps probing for it. It keeps holding up. It is not biting, but it's going to. And when it does, I think the same risk, or that gold faces the same risk that we've seen with equities and particularly with crude oil. I think it's going to catch up. I think that's the risk that that the gold market faces is what we've seen with oil. And I'm not saying gold's going to go negative. I'm saying it faces the risk of a drastic decline like that when the reality sets in and the cycles get in sync. And I think that's going to probably come with a broader liquidation of all asset classes as this financial crisis continues.
We'll have more with Tim Cyclesman Wood right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with the U.S. Central Bank, the Fed, having a 0% interest rate and the Bank of Canada 0.25%, will we see negative interest rates, or would it be in North America's best interest not to go there?
I don't think lower interest rates are a positive sign. I've maintained that all along, and I think it's a sign of the desperation, a sign of the trouble, a sign of the financial issues that we face, if you will. I've said that all along. It was in November, actually, of 2018, we saw some longer-term cycle bottoms in the bond market, and that was like a brick wall. I mean, it turned interest rates on a dime. The longer-term stuff turned first, and then, the shorter-term, last summer, we started to see the weakening of the shorter-term interest rates. And I have shown in the research papers that this was, lower interest rates is not a good thing. It's a sign of the financial trouble that has, reared its ugly head. And lower interest rates are not going to fix anything. It's a symptom of the problem, not a solution to the problem.
Don't low interest rates hurt banks, pension funds, insurance companies that were depending on some rate of insurance to help cover their expenses and give them profits?
Right, and even the elder investor, used to, back in the in the day when we had normal markets and interest rates, people, when they wanted safety, they could go to the bond market and, get a 6 or 8 or 10% return on a particular bond and have some sense of security, but not anymore, So yes, it's hurt everyone.
Maybe the best way to phrase this is, if negative interest rates were the solution to financial problems, then Europe and Japan should be booming, because they've had low or negative interest rates for quite some time.
Exactly. I mean, you just made the point. Exactly right. And so, looking at it from a cyclical perspective, which is, in my mind, the most sensible way to look at it, is that this has to run its course. What we're seeing is the deflationary decline from, I guess I say this a couple of ways. I mean, number one, we moved back in 2000. I think we moved into, and I've said this 1,000 times, but I think that was the organic top of the economy, the organic top of the equity market. And since then, what has the Fed been doing? They've openly admitted they've been fighting the deflationary forces. So that's what all this has been about. And in the process, they've created the equity bubbles that we've seen. And I say bubbles because, we had the bubble that followed the 2002 low when we, blew everything up, the housing and commodities and equities into the 2007 top. And then we got this bubble. And so those were all efforts to fight the deflation. Those deflationary forces are still at play. That's what we're seeing. And until that cycle expresses itself, if you will, and runs its course, there is no solution. I mean, we have to get to the bottom of the cycle. And when it turns and this deflationary purge happens and we see, the unwinding of this bubble and these excesses and the monetary policy and so forth, then the cycle will naturally turn. And, we move into an environment of higher interest rates, but we're not there yet. It has to purge.
Tim, is there anything that you could call a safe haven right now?
I think at this point, I mean, in my mind, cash. I know that gold scares me. I mean, yes. I mean, I openly admit, I tell anyone, it's held up a lot longer than I anticipated here, but it faces the risk that we've seen in equities and more recently in crude oil because of those same relationships with crude oil. That none of that's been invalidated. So while it's held up and it looks good at this point, it's risky as it can be. Equities, they've levitated here, and I think that's given hope, and the Fed's done their thing to try to put a bottom in, but I don't think that's going to work. I think it's temporary. How long does it hold? I don't know until I get a sell signal and we see some more structure at that degree fall in place, but this advance is counter trend, I feel like, from every indication in equities, and that they move lower, and so that's risky in my mind. And then, you look at bonds. Well, bonds have obviously been a good place to be. And so far, so good there. I think that the tendency is to see lower interest rates, higher bond prices. But one thing that I fear could set up with bonds, if we get into a situation where we see a broader base liquidation that I was talking about as this financial crisis unfolds, then I think we could see not only gold, a liquidation in the gold market, but I can see where we could get into a situation, potentially. I'll have to see the structure fall in place. It's something I'm watching. But I can see the potential we could get into a situation where even the longer end of the bond market, say the 5-year and out, or particularly the 10, 20, 30-year and out, it comes under pressure and we see a liquidation even in the bond market. So as this moves forward, I think it gets increasingly risky in pretty much all asset classes.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.